Welcome to Dangerous Policy. I'm Charlene.
I'm Crispin.
And today's episode, we're going to talk about the Australian economy. Now, I know you're kind of pessimistic, I guess since maybe the virus, where Australia is heading. I want to know why you think we're in trouble.
Yeah, well, I think Australia's heading for a cliff. And obviously, I don't have any specialist knowledge as a government official or anything. This is just my personal opinion. But I think we are facing a total collapse. And that this will happen in 3 or 4, well, it'll start to happen in 3 or 4 months' time and then rush through probably another few months after that. And that's because of a few main factors. The backbone of this, I think, will be a housing collapse and a potential banking collapse. And the reason for this, and look, what I'm saying is very kind of apocalyptic, but I think it's fair. Australia is in this unique situation where the government has provided significant funding to ordinary people to get them through COVID, right? So we have in Australia what's called a JobKeeper program, where if businesses are faced with a lockdown, rather than firing their employees, the government will basically pay their wages to up to a certain amount every fortnight to keep the relationship between the employee and the employer together, so that when the business can reopen, they can get the staff back in very quickly. They're not off, somewhere else because they've had to, sell their houses and move out. Like they can reconnect that relationship and get their businesses going really, really quickly, right? So that's been the goal. I think, and broadly speaking, that's been a very intelligent prophylactic policy at the cost of obviously an enormous explosion of our national debt. However, Australia is lucky in its national debt. We have a very low national debt relative to the rest of the world. We came into this crisis with 30 uninterrupted years of recession. We're now in our first recession in 3 decades, so certainly longer than, Charlene has been alive. But this still feels kind of, normal, right? We don't have the feeling of the recession like you do in many other parts of the world. But while we have a very low level of national debt, we have a very highest in the world level of personal debt. Okay, so Australians have the most in mortgages and personal loans, credit cards, student debts, you name it. Per capita in the world, we are way up the top. And the way the banks have operated, I wrote about this about a year ago, where we had a massive boom in Sydney and Melbourne's housing market, right? Where people were ending up with, 2 hours outside of the city by car with $1 million mortgages for like these shoe boxes, right? So young professionals starting out in life, wanting to get on the housing ladder, accepting huge burdens of debt, right? And the banks would lend to them on the basis that we were going through a boom, so there would be capital gains from their properties. And that would allow them to flog these poor mortgage holders with debts, so that with high interest, high value products, so credit cards, personal loans, enormous debt burdens, high interest rates, right? On the basis that if the person and the couple or whoever lost their jobs or had to sell, or unable to make their mortgage payments, they could sell their properties at an increased value, which would pay off both their mortgage and also their credit cards and things like that.
Yeah.
So the banks were lending hand over fist in an environment of declining interest rates, right? Expecting that it would be fine, right? So this has echoes of obviously the global financial crisis. But the assumption was, look, even if the housing market comes off and there's a slight uptick in unemployment, they'll still be able to manage it across the economy, because people will start to pay down some of their existing debt. They'll be able to taper off the tap of their high expense products, and then over time, the Australian community's debt levels would be reduced. Are you with me so far?
Yeah. Okay.
So all of that was predicated on a few things being true, right? And I was concerned about this at the time, and now it's gone worse than I could ever have imagined.
The housing dropped.
Well, So the housing market, yes, first of all, housing market declined, okay? So people's debt burden relative to their total assets was much higher. Secondly, the Chinese investment in Australia, which is one of the biggest drivers of the boom, has completely gone off, right? So this is exacerbated by the fact that the tertiary education sector has basically shut down. So people were sending all their students to Australia. Their wealthy families would come to Australia and buy property. Obviously COVID has shut down the borders. The tertiary sector stopped. The political crisis that is happening with Australia and China and others has meant that China is discouraging investment in Australia. So that's completely dropped off in terms of the housing market. And then most importantly of all this depends on no mass increase in unemployment, right? Because if you have too many people who can't pay their debts, you can't have the government foreclose on everybody, or the banking sector foreclose on everybody, because they won't be able to offload those assets and they won't be able to carry that debt, right? So what the government has done is that they have provided this JobKeeper payment, and most of the JobKeeper payment has gone on debt, right? So people have been paying their mortgages temporarily, hoping that their job will be there when this runs out. Okay, so that's why it hasn't totally collapsed. Okay, and then on top of that, you've got whole changes to the way the workplace works. So we've got all these people working from home that didn't work before. A lot of those arrangements are becoming permanent. So you're going to have this huge surplus in office space. A lot of that office space will be converted to residential property. That'll increase the supply. You'll have the total drop-off in immigration because all the borders are closed until 2021, meaning that there's no increase in population, meaning that there's no increase in demand, right? And then you also have, and then you also have incentives to expand the construction industry, right? So you are, so what you have is massive investment in new properties to encourage the construction industry to keep going, meaning that there'll be an increase in supply in property as a result of all these government incentives, right? So across, like on every angle, on both the supply side and the demand side, a housing collapse, I think, in my opinion, is absolutely imminent. Like you will not, there is just zero way that I can see a way through it. The only possible solution would be is if the economy ramps back up, everyone gets back to work when the JobKeeper program ends, and everyone is still able to kind of model through by paying off their debts, right? That's the only possible way. But there's just that just seems utterly implausible to me. So if you have this massive rise in unemployment, huge debt defaults, the banks are not going to be able to withstand that. We have 4 major banks in Australia, and plus a whole lot of smaller ones, but 4 major ones. They are not going to be able to handle $2 trillion on their balance sheet. It's not possible. So the banks are very likely to collapse short of a bailout.
So for the everyday person, what does it actually mean?
Well, yeah. So it means the liquidity is completely dried up. Housing assets, where most people have their wealth, evaporates. That means that there's no investment in new businesses and new jobs. So we have a huge rise in unemployment as the JobKeeper program ends. So the JobKeeper kind of creates the unemployment rate artificially low, because while you're on JobKeeper, it's assumed that you have a job, right? But a lot of these businesses will not be able to re-employ these people. So you'll have, millions of Australians out of work. You'll have everyone's life savings and their house and everything gone. There'll be mass rise in homelessness, all the social ills that come with that. Massive increase in demand on social welfare and benefits and things like that. There's the only way to avoid it is to further increase government debt, right? Like if the government continues to borrow money to pump into the economy to keep it like treading water, hoping that it'll eventually, kickstart it and you'll get a rolling start in your car and get the economy back on the road, then maybe. But I think we're just going to be delaying the inevitable in a way. And in fact, in the meantime, you're just increasing government debt for future generations. It's assuming that there's going to be no problems that they'll face in the future, or that like the economy all gets back to normal in a post-COVID era.
And then when we define like normal, we define that as people going back to their jobs and productivities. Is main
Yeah.
increased.
So if businesses all resumed their normal activity, and people went back to their jobs, and there were people able to afford to spend, right? Because what happens is you get your paycheck. Some of it goes to debts and some things. Other things goes to your discretionary spend. So you'll buy stuff, you'll go out to dinner, and that all generates economic activity, right? And that allows people to, employ people and expand and invest, right? And also creates confidence. If people out there are spending, then people are confident that they will still have money for the future, right? It's when people start to save, pay down debt and save too much, then that reduces confidence. And people will then try and save for a rainy day. But there's a cascading effect here, and in the backbone of it is personal debt. Like at the core of all this, people are not going to be able to pay their mortgage. And if they can't pay their mortgage en masse, that means that either the banks go under or they get bailed out. And if the banks go under, then people will be rushing the banks to get their money out of their ATMs. That there's not enough money in the ATM for that. That's not how it works. So people's life savings will be under threat. At least, people, the government won't be able to guarantee deposits at that level. And we'll be through, many years of significant economic pain as a consequence of that. Now, this is I've painted a picture that is really dark.
Oh, yeah, it's like doomsday. I don't want to talk to you.
Yeah. No, I'm not. And I'm not like, I recognize it sounds, what it sounds like. But I'd ask the viewers at home who are watching this, does anything I've said make just not logical sense from what you see out there? Like, it's not, there is, if we have a market where people have huge mortgages, are unemployed, unable to pay their debts, no foreign investment, no immigration, huge investments in construction to continue the construction, over demand in oversupply in the commercial office sector. What does this lead? Like, and then you've got all the credit cards and personal loans and all this sort of stuff. No one is going to have any money. Like, there'll be no economic activity. And people's major assets, i.e. property, is going to fall by the wayside. That'll have flow-on effects for every other form of investment. It's just, it's a cliff. It's a cliff, and I don't know where the bottom is. And I don't think Australia's ever been in this specific situation. And there's not a clear way out of it. Like, all the options are really unpalatable. We could throw open the borders and invite as many people in here as possible, but then we'd be inviting mass death and disease. We could continue to borrow money and pump up the economy, but we don't know for how long, and it would be billions of dollars a week that the government's debt would be increasing by. That's increased taxes, that's lower growth, that's like that all has to be paid back. Or we just take the pill. And there'll be some good that comes out of it. The good would be that these unsustainable practices would end. Like, so at the moment, if you go back 20 years, the ratio of a house versus an individual income was like 3 years, something like that, right? So it means, like, if you're 3 years worth of your annual income, and you could get a good house, right? Now it's like 12 years, something like that. Like, so that's always been unsustainable, right? People can't afford to live in places like that. The other problem that we have in Australia, and I don't know where it's going to go, and maybe a tax specialist will be able to explain it. We have this unique thing in Australia called negative gearing, where if you have an investment property and you incur a loss on that investment property, it's a really bizarre exploit, right? You incur a loss on that investment property, you can claim that loss against your normal income.
Yes.
So normal tax deductions are relative to what you earn. So let's say this podcast made a ton of money. It's not making money, but I would say it made money, right? If I had equipment that I buy or expenses incurred, I could claim those expenses as deductions against the income received by the podcast, right? But I wouldn't be able to claim like my own private deductions that aren't relevant to the podcast. Or actually, better example, I wouldn't be able to claim these bits of equipment against my public sector income, right? Like it doesn't work that way. The only option to transfer it is in the housing market, right? So if you have a negative geared property, you can claim that deduction against your normal income, which is really bizarre, even income that isn't relative to that property, right? So what this means is you've got all these people across the economy who can't pay their rent, right? That means that come tax time, you're going to have all these investors claiming huge deductions because the space between their income from the property, i.e. how much they get from rent, and how much they've paid on that property over the course of the year, let's say their mortgage payments and their upgrading of housing, I don't know what the specific criteria are, but certainly that gap will have increased, is going to lead to huge deduction claims against the government this year, right? So we're going to have, in the end of this financial year, massive increases in like social claims, right? All the JobKeeper payments and everything, and a massive increase in deduction claims and a loss of tax receipts from lower economic activity. So the government's not going to get any money this year, basically. So no matter what, it's going to have a huge deficit, even without borrowing money. And so I don't know where that's going to go. You've got the temporary housing markets collapse. So the Airbnbs of Australia we don't have any tourists, so they can't afford to run those things. So all these people who have these weird setups where they've got mortgages on multiple properties, they obviously can't afford to service the mortgages. So yeah, there's this just, I mean, I know I'm being very dark, even when I'm trying to give it a positive spin.
Where's the positive?
Well, the positive spin is that in the
more affordable housing.
That is the positive. You'll be able to buy a house if you've got a job, and you can find a bank that'll lend to you at a much cheaper price. But you're best off doing it just from your normal cash savings, because it'll be hard to get a loan. But no, it's and that's the problem. Once you've got this collapse, like to get it started again is really hard, because in order to do that, you need to have a lot of lending and a lot of liquidity to get people to open businesses, particularly in an environment where there isn't much happening. And I don't know how that'll work.
When the global financial crisis happened, essentially the US they bailed out their banks.
They did.
And then therefore their debt increased. Is that what happened? And then that's how they...
That's exactly what happened, yeah.
Yeah, overcame that. So I'm trying to think in my head like a roadmap to recovery.
Well, I don't... So there was a massive housing collapse in the United States, and there was a massive recession. The banks were bailed out so as that the financial system didn't collapse, right? So that people didn't have a run on the banks. So the actual apocalypse scenario is everyone runs to the ATM to get their money out, and their money's not there, because that's not how it works. Like when you deposit money in the ATM, right? They use that money for stuff, right? And so they have to keep a certain amount in the ATMs to account for the normal withdrawals that people make every day, but they don't. If everyone did that and took all the money is physically not there, right? So, and then they justify it based on their balance sheets, right? So they go, well, I've got all these assets in mortgages that I own, right? But if no one's paying those mortgages, then they're not assets, they're liabilities. Yeah. They're not able to sell those properties to people, because all the property that has been given is at a rock bottom price, right? So what we'll see is all these foreclosed properties, thousands of them, hitting the market at the same time, and people not being, not even wanting to buy them. I mean, during the financial crisis, they were giving houses away in Vegas, and they couldn't do it because people didn't want to pay the property taxes. Like, they were just like, we don't know when anyone will have a job in Vegas, so there's no point getting this free house, right? So
crazy.
yeah. So we are and Australians are not used to this. We've had several decades of just extraordinary success, where every problem has been, dealt with by buckets of cash, and now we are in a deep crisis. But we don't know it yet. We're just kind of like cruising along. No symptoms of this cancer, but when JobKeeper ends,
we'll see the cracks.
Yeah, and I think it's going to be much more serious than people even expect it to be. Like I've tried to paint this picture, but my honest opinion is that the banks will collapse.
So how can people prepare for this apocalypse?
First of all, don't. Okay, so this is my personal view. People are going to watch this and think I'm crazy. That's fine. Don't keep money in the bank you can't afford to lose. Because there might be a freeze on deposits and all kinds of stuff, right? The banks might take steps to prop themselves up using your money, right? Don't take on more debt if you can possibly avoid it. If you are able to lower your debt burdens, then do so. Think ahead. If you were to lose your job in 3 months' time, what would you do? Right? It's not a pleasant thing to think about, but just try to plan for that, because a lot of people who think they're safe are going to be in strife. And think about it like on every level, and think about it in terms of like, other people in your life, if it happened to them, how you'd support them. And like, there's going to be a lot of pain that people are not used to experiencing. Like a lot of people who have never been out of work before are going to be out of work for a prolonged period of time. And if you have a lot of money exposed to the financial sector, so if you have a lot of shares in the finance sector and so on, I would consider like diversifying from that. There's just take the steps to prepare while you can, because I think that we are going to head for an economic car crash. And look, either I'm right or I'm pleasantly surprised. So like if you're watching this and you think, okay, how seriously am I going to take this really? This sounds like a crackpot. Well, think about what's happened this year. Imagine being that guy on the corner or girl who's like the homeless person with the banner giving doomsayers on the 1st of January, who said that by the mid-year, every single country will have closed its borders. There'll be a massive global disease. The economic, like $20 trillion of global economic thing would have collapsed. People were rioting and pulling down all kinds of like statues of George Washington and stuff in the street. Like what you would be that weirdo, right? Yeah. And I'm saying all this stuff has already happened. Okay. I'm just analyzing the after effect. Okay. Like I'm just saying, look, there is no plausible scenario when we have a society with $2 trillion, $2 trillion US worth of debt in a country of 25 million people, all carried mostly by a few banks, in an environment with mass unemployment, obfuscated by the fact that we've had this significant coverage of government spending, where we don't have open borders, where we don't have foreign investment, where we have a massive oversupply in office space. There's not another option. Someone has to pay the bill for this, and it'll be the banks, which means it'll be our deposits. And the other option is government debt. That's it. And I just don't think the Australian government, if I was to read the tea leaves, I could be wrong about it. This is probably the thing that I'm least certain of. But I don't think the government is going to have an appetite for an unlimited, open-ended commitment to increasing its national debt just to cover private debt levels here in Australia. I just think that is That's going to seem crazy to some people, particularly in the federal government, which is made up of conservatives. They're just going to be like, okay, so what you're saying is we have to borrow against future generations a potentially unlimited amount of money for an unlimited period of time.
Yeah.
I mean, that's just how are we going to sell that proposition? And this problem was created through massive private debt. I mean, this problem was created by COVID, and like we were going to have these economic problems are external, but the structural weaknesses in the system that have been exposed have been there for a long time, and I've been talking about it for a while. So I just hope that everyone enjoy the next few months. And the biggest positive, we don't have much disease. Like, we have absolutely smashed the disease, and that is a really great thing. And that has helped us because it meant that we've been able to open earlier. The economic activity has come back much faster than we ever thought possible. The level of government debt to date has been lower than we would have expected as a consequence of that. So we're coming into this in the best possible shape relative to any other country. But there is this massive behemoth sitting in the background because banks were so eager to lend out free money and then also flog these extremely high-end products, mostly credit cards, to keep people in a debt trap. And now it's collapsed.
Coming back. Okay, let's leave there.